What's the true value of an ounce of gold? Somewhere between $33,000 and $40,000 today. I think that's very interesting. Are you in the stock markets? Are you going to stay in the stock markets? If you make that choice to remain in there, you better be properly diversified. I can only give you 2 guarantees in this world. Number 1 is I will show up and I will do the work. Number 2 is that at some point, all assets go to their fundamental value.
Lynette Zang just dropped a prediction that could shake every gold holder and every stock market trader who isn't ready. She's warning that the next move in gold and silver won't be a rally. It could be a reset level jump. And if you're positioned wrong, the markets are about to teach a very expensive lesson. Stay right here, because what Lynette reveals next might be the last warning you get before the charts explode.
First of all, let's be clear on what a carry trade is. That's borrowing at a lower interest rate level and then taking that fiat money and putting it into a higher yielding investment. So the Japan carry trade, you might recall, was the big carry trade because they've been in a deflationary spiral with negative interest rates, and either non-existent or negative interest rates since the 90s. But as we saw when they started raising the rates, that carry trade exploded. Well, then the US dollar was a carry trade. And in fact, the carry trade, the dollar carry trade, outshines all other assets on a risk-adjusted basis, which I think is like really, really interesting. Don't you think? After all, you don't really think of the dollar as being a weak and a carry trade. But record US government shutdown, now that carry trade is at risk of unwinding since the shutdown has ended. And that means that hedge funds and traders are rushing to exit that carry trade because of the volatility, right? This is the volatility in the currency, which could easily trigger a crisis. So the carry trade now is set to trounce the world's booming stock markets, right? Because it's so volatile, that has to be unwound, and that has an impact because if you're borrowing dollars cheaper and you're putting that money in stocks, well, you're using borrowed money to buy those stocks, aren't you? And if you have to unwind that trade, that means that you have to sell those stocks to get out of that carry trade. And that has an impact on the global stock markets. So you might have noticed the level of volatility and the problems in the global markets. It's not just here in the US, it's on a global basis. But what you must be clear about, especially since we're hearing so much and we've talked so much about the significant overvaluation in these markets, which are being led by traders. Well, the U.S. equity premiums are in negative territory. That's not something that typically happens, but what that actually means is that if you're holding money in the stock market, you are more likely to lose that money. As well as the inflation loss of the purchasing power of the dollar, the value of the dollar. It's a double whammy. The markets go down and you lose value, purchasing power value. I don't know. What do you think? I think that sounds like a good deal to me. But here's what the markets, those pundits, those talking heads that, of course, they only want you to buy, U.S. stocks now offer investors no return whatsoever on a risk-adjusted basis. I think that's very interesting. Are you in the stock markets? Are you going to stay in the stock markets? If you make that choice to remain in there, you better be properly diversified so that even Wall Street insiders are telling you how overvalued these markets are and how you are not going to get your money out of them. U.S. stocks now offer investors no return whatsoever. They actually offer you a negative return because you can only convert them into dollars that are rapidly losing purchasing power value. And take a look at this relative performance chart. There is spot gold and spot silver, manipulated as it may be, but absolutely trouncing all of those U.S. market indexes and globally too. The S&P 500, the NASDAQ, the Dow Jones Industrial Average, and even Bitcoin. These are the only assets that are severely undervalued. And the fact that gold, according to the Bank for International Settlements, which is a central banker's central bank, gold held at home is the only financial asset that runs no counterparty risk. Get it done, people. Time is running out. You have your sound money strategy in place? Do you have your local community strategy in place? Because we need to create that surety in food, water, energy, security, barterability, wealth preservation, community, and shelter. And we are running out of time fast. Call us. Let us help you. Our goal is to meet you where you are and get you to where you want to be. And we will take all the time and put forth all the effort that you need to make educated choices that puts your best interest first. Well, we know that housing and real estate is a significant contributor to U.S. GDP and also global GDP. GDP is just all of the money that flows through the system. And in the U.S., it's roughly 30%. In China, it's even higher. But you need to keep that arena moving forward. And you can see from this graph and the Case-Shiller U.S. National Home Price Index, not only are home prices near their all-time highest level, $415,200 is the average selling price of a home in the U.S. You got to make some bucks to qualify for that. And you can see that there's a little bit of stall that's happening right now, but oh my goodness, we sure can't have that. We have to make sure that these home prices continue to go up. But with interest rates where they are right now, home affordability is a long ways away for most people, and that's a problem. So they need to make homes more affordable. First lien mortgages definitely significantly lower than they are. What can be done to boost that home ownership if the public can't afford the mortgage? Ta-da! 50-year mortgages, elongating that mortgage out to bring the current price down. The problem is that even the 50-year mortgage at today's interest rates and pricing structure, what does it save? A couple $100 a month? It doesn't really mean anything. There is no balloon set in this proposal, by the way, because I know somebody was talking about there being a balloon in it. There isn't, but a 50-year mortgage. And I also couldn't find whether that's going to be a fixed rate mortgage or a variable rate mortgage. But this is just a proposal. So we'll have to pay attention to this. But what can they do to keep real estate prices going up, which is really inflating up? They can elongate the mortgages. So stay tuned. We'll keep our eye on this, but don't be suckered in. Although if it's a fixed rate mortgage for 50 years, you can use the same exact strategy as the U.S. government uses on its debt, which, and this is part of the sound money strategy, is to repay that debt with dollars that have no value. How do you do that? You buy undervalued sound money gold. It will go to its fundamental value. Look, I can only give you two guarantees in this world. Number one, is I will show up and I will do the work. Number two is that at some point, all assets go to their fundamental value. I've shown you a gazillion times, and so do all of these bills show you, that the true fundamental value of government debt-based currency is zero. Even the Federal Reserve shows you that on its purchasing power chart. What's the true value of an ounce of gold in terms of all of these dollars? Somewhere between $33,000 and $40,000 today. The more money printing they do, the higher that number goes. And so what do? When they do that overnight revaluation, you sell as much of your gold as you need to bam, pay that mortgage off with dollars that have zero value. Call us. We'll explain it further. We'll help you see how the sound money strategy.
So, what do you think about the gold and silver prices before 2025 end? Let us know your thoughts in the comments box and hit like button, subscribe, and press the bell icon for more important videos like this. Thank you.